Welcome back, traders. Today's backtesting session, we're gonna try to find the intended direction of the NZD USD. Uh, of course, to find a clear and the intended direction, we need to learn how to do it. And with that, we're gonna use the ranges topic, right? So I'm just gonna select randomly certain data in the market. I put it in 1 minute because after doing and finding the real direction of the market by this date, I wanted to do entry confirmation backtesting, but it won't be for today's session, but it will be for later, right? So I have already explained to you plenty of times how it works, the how to find a proper direction of the market, right? And the thing here is that I want you to check or to realize how it works, okay? So with that being said, let's try and do it. Okay, let's do this. So let's remind a little bit of theory about the ranges, how they start and how we have to bear in mind. So remember that if we are in a bullish example, right? The idea is that the price, well, comes from a direction, like for example here, boom, right? Once we got this, ideally we would wait for the price to do the next for a continuation of a range. So we're gonna wait for the market to do a pattern of continuation, which will be the next. So the price consolidates a little bit, creates liquidity in these lows. So there's people accumulated, there's money trapped. Then the price takes the money of the people. When I say there's people trapped, it's because people are watching this. For example, trend lines. So they're actually putting orders. The price takes the stop losses of these people, and after doing that, the price simply continues with the intended direction that was a bullish example. So boom, we continue with the direction. So the pattern that I look for is the next is this. We have first of all we have a liquidity sweep, which is this one. So all the people or the money of the people were taken on this low, right? After that liquidity has been taken, I check if the price reacted in an order block or a clear order block, for example, here, we're imagining it. And then after this reaction, I expect a break of structure with a bottom of the candle, and with it, I have a confirmation, which means that this low, the lowest low that has been created, becomes or the strong low, or the low that will be actually respected in this example because we're in a bullish trend, right? So when we are in a bullish trend line, most of the lows we have are will be strong lows, right? Wait, not most. The lows that complete or accomplished all these confirmations we have mentioned becomes strong lows. So remember, what are the confirmations? Liquidity sweep, reaction in an order block, and then a breakout of structure with a bottom of the candle. With that being said, we will expect for the price to continue with its intended direction, which is bullish in this example. So we can see certain retracement, but we will be bullish, right? And we're gonna keep looking for the same pattern and so on, right? So this low will be respected. Now, when the price changes the direction, or when do the price makes a change of direction? It's simply when, for example, it just make something that we call market shift, which means that the price gets very close to the low and boom, it does not respect it. So when the price do not respect the strong low, we can see of it an evident market shift, and now we're in a bearish trend line. And in a bearish trend line, we do exactly the same stuff. So to find our strong high, which in this case will be the high that will be mostly respected. So we will look for example, here a reaction in an order block, right? Reaction in another block, and after the reaction in another block, let's imagine that the price did the next, just for the sake of the example. So the price took the liquidity of the high and they make a pause. And with this, we have an strong high here. right? This high accomplishes with all the previous confirmation we have mentioned. So what is the confirmation here? Liquidity grab. This is the liquidity that has been taken, right? Liquidity grab. Boom. And after this liquidity has been taken, we have the next, which is a break of structure, a boss, right? And more important, we have this. The strong low has been not respected. So it means that now this strong high becomes the most important high, and the market will continue with its downtrend, right? So if you just pay attention to these last 5 minutes, and if you want to stop and check it again, I suggest you to do it, because here I have explained the logic behind all the market analysis. Once we have all of this I just mentioned very clear, it's we have more possibilities to find the clear and real direction of the market, which is something that for us as a traders matters the most. We just need to know the clear intended of direction, right, or with a clear direction, and with that we will be able to find confirmations, entry in the correct direction, right? So this is a small theory explanation. Remember that I have a full video in which I explain everything, but here I explain it, very briefly. Now what I'm gonna do here is that I'm just gonna keep analyzing and I'm gonna put into practice what I have just explained to you, right? Now we're gonna try to find the most evident strong highs in this moment in this market, right? But to find the real direction, we need to find, let's say, we are going to work with this part of the market. Wait, with this one, right? This is the one that matters the most for us, right? Because this is the most recent part of the market. But we need to understand the context. So we need to understand the previous range and the previous one, right? So with that, we will be able to understand actually where, if this is a retracement or this is a continuation for a bearish for a bearish trend, right? Or because if this is a retracement, we will be able to expect something like this and then it retrace and continue with the uptrend, right? Because it's a bullish trend. So how do we do that? With the ranges, something that I have just already explained to you. Now remember the pattern, right? I'm pretty sure you do remember the pattern. So let's start for the most obvious thing, right? I gotta start really back so you will be able to understand the price movement in action. So look, this is, or I want you to focus on this range, the one I'm marking here, because this is a really important thing. At this moment, the price was in a bullish impulse here. The price took the liquidity, right? Here it took the liquidity, they make a break of structure or the highest high, which was this one was the highest high. So look at the next. As I said to you before, I said we were in a bullish trend. No, I was mistaken. We were in a bearish trend. So what did the price do? The price went make a really huge impulse, enter on this order block, which I'm gonna mark in this moment. Boom, it had a reaction and the price consolidates. It never breaks neither the higher high, neither the lowest low. So the price gets in a consolidation phase, right? Now, after this, look what the price did. It also reaches to this, which is another order block. Wait, what happened with this? Here it is. Boom. It reacted to this order block, so it made an order flow, which means the flow continuation of orders of order blocks. And after this reaction, the price was strong enough to break this low. So with this, we can confirm in New Zealand dollar, we are in a bearish trend, right? For this example. Now what we're gonna keep doing is that we're gonna keep updating our strong high or the strong low, right? Now we already know we're in a bearish impulse, and look that this high accomplishes all the confirmations we mentioned before. So we have reaction on an order block, very evident, and after the reaction on the order block, we have sorry, and before we have this liquidity grab, or it took the liquidity of this high, and then I would assume this breakout of the structure will be the most one of the most relevant boss breakout structure. But the most important one was this one, because it has the breakage of the lowest low. Once we got this, well, we just continue with the downtrend. Now I'm gonna try to analyze here if we can find sort of a beginning of a range. So look at the next. This is a very evident order block, and look, the price never gets to this, never gets to this high. If the price has to get here and continue, we would assume a continuation or a new range beginning, like a strong high. But since we don't have this, this is just liquidity. This is just liquidity on the market. So all of this is liquidity. Now, if you don't know what liquidity is, I kindly suggest you to watch my video in which I explain the liquidity. There I have a theoretical video in which I explain the theory behind the liquidity, and I have another one which I actually explain it on the market. Right, so this is the strong high. There is no doubt about it. This high here is the strong high. Sometimes when we are like in this example in this currency, there is like the strong high is so far for the current market. It's just because we need to be able to understand that we need to keep updating. And when I was doing here, I was updating the price. However, since it didn't accomplish the confirmations, I couldn't do anything with this. Now, what I'm gonna do is I'm gonna try to understand why the price reacted here on this high. And definitely it must be because of an order block, or mostly an order block. And as if you can see here, we do have it. So the price entered here on this block, and it entered after taking all the liquidity of these highs. All the highs that are here that I'm pointing at, they were liquidity. So highs in which people would put their orders, and all of them went to stop loss, right? After the price entered here, we would continue. Okay, the price is continues with the bearish direction. That was something I was saying to you. If the price continue with a bearish direction, well, it means that it will continue going down. So actually, I mean, ideally, let's say the price must continue going down, right? Apparently, right, in a daily time frame. So this is the point to be mitigated. Would the price do that? We are not so sure, because the price. This is a retracement. If you remember, or if you take into account the complete impulse, so this complete impulse, right, the price is making a retracement, so it can continue with a retracement and react here and continue going down, right? But look, it still has a lot to continue going up, right? So everything can happen, as as everything in the market. Everything can happen, right? So this is the thing. We're in a so this is what I do always. I just put here the information about the market direction, so I never get confused. So we're in a bearish impulse. We're in a bearish trend line on daily time frame, and well, it seems that it's continuing, so it's fine for us. This is the point to be mitigated. So apparently the price can continue going down. I think so. So look how interesting. The price can get to this order block here, which is a daily order block, a demand order block. So I consider the price can do the next. And this is something that we, as this backtesting session is, we're gonna try to find the direction or the intended direction of the price. So far on a daily time frame, I could say that the price can go down, and here we could expect an interesting reaction. So the price can do two things: going down, had a reaction, took the liquidity of the people who were selling, and then boom, continue. Or if this order blocks is so important because it's a very big one, we are in a daily time frame, the price just can continue here and then boom and boom, continue pushing up, right? Because here you can see a very evident trend lines, which is liquidity, until the price probably gets to this area, and in this area, boom, continues going down, because it needs to break. It could break this strong high, or simply could do the next, continue here, had a reaction going down, right? As a traders, we never know what will happen next. We just need to grab the context, all the information, and then start working out what could happen in lower time frames. We are not institutions, we are not banks, governments to understand or to determine the direction of the market. I think neither they do know about it, right? Anyway, so we have this bearish in a bullish trend line, in a daily trend line, sorry, daily trend line, excuse me. Bearish in a daily trend line. Now let's go for 4 hour time frames. As you can see, evidently is this is in a bearish trend line. We didn't need to go farther, but I want just to understand the context, so that's why I'm just analyzing the previous range and understanding why it worked the way it worked, right? So again, so I'm just trying to find out here. This is the strong high, as you can see here, and is reacting to this order block. Oh, no, it didn't. Supply. Right, so ideally you should have entered here, but we just... Okay, this is something I want to let you understand. Sometimes in big time frames like 4 hours, daily, weekly, the price do not mitigate exactly the order blocks. Ideally, we would like to see a complete mitigation of the order block or something like this, but sometimes it just almost reaches it, and it still counts because for us, we're just um, trying to find the intended direction. In lower time frame, I mean 1 hour, 50 minutes, 5 minutes, 1 minute. There, we need to be very picky and very strict with the confirmations. So far we have a strong high here. We have a boss, so everything is confirmed. And now let's go a little bit more close to the current market. And here we have this. Um, Trying to analyze this. Look, right, the price entered here, and here we have the pattern we were looking for. This is it, which is liquidity grab. There you have it, liquidity sweep. Liquidity has been taken. It's very evident. And after this liquidity has been taken, we have a break of the structure, which is here. Boom, boss. Right, so now this is a strong high. This is a daily order block. So let me write it here. This is a order block which is daily, and we now, this is something I used to do, is that I like to go in lower to see order blocks in lower time frames, so we can refine our order block and also understand possible points in which the price can do certain retracements, like this one. Look, if we refine this order block, we will find the next. here, here, and here. Boom, there you have it. And now I will find the 4-hour order block, which is this one. This is a 4-hour order block. So I just mark it this one. So try to understand why the price is having certain reaction. You see the order block here. So let's see here. So this is a potential entry point, at least for a retracement, a big one, I would say, at least in lower time frames because is the time frames we work with. So this is what I would expect. We have here a strong high in 4-hour time frame. All right, now what you're listening there, guys, is a alarm I have in the market because at this moment I am actually executing orders. So give me a second. Look, perfect, beautiful. I have a pending order and I just grab here the liquidity. I am waiting here for a pattern of confirmation. Okay, I'm gonna show you this in this moment, right? Look, this is a coincidence, honestly, because I'm just backtesting other stuff. But I am executing an order here in the New Zealand dollar, particularly. That's why I am analyzing this pair. And here, this is what I'm looking for. I'm waiting for the breakage of the high. We have here order flow. I mean, all of this is order flow, which is good, nice. And now I will wait for the price to get to this zone here. Now I need to put a stop loss. The stop loss I'm gonna put it right here. 2.5 pips. 2.5 pips is great. And I would wait for the price to get at least to this point, or what was the other point I was expecting? A little bit up here. All right, so if the price actually opens this order, we will have a 1 to 7, which will be a really nice trade. So I will need remember that the breakage is with a body of the candle. The alarm just informed me this, but it's not yet. Just put it here just to know how much I'm gonna spend, but I will need a little bit more. So probably if I stop a little bit the class is because I have to put the spending order, right? Okay, let's continue. So according to this, in 4-hour time frames, we're in a bearish impulse. For our time frames, oh sorry, we are still bearish, which is fine. Which is fine. We're doing fine here. Right. Now some of you may ask, hey Manuel, why don't this will be our strong high? Wouldn't accomplish all the confirmations? Well, if you can see, the price is actually reacting on this order block, which is good, but we don't have the liquidity graph. We do have the boss, but not the liquidity graph. So this is not considered as a strong high, 4-hour strong high. Okay, perfect. Let's keep moving with the explanation, right? So ideally the price may go down here, boom, have a reaction, and start making a retracement. Probably get to this order block and continue going down, or ignore it and continue pushing up. Yep, we don't know. We don't know. All right, now let's go to 1 hour time frame, and the high you mentioned before, this one, actually is the beginning of a range on 1 hour time frame. So look, the price is actually reacting in this order block right here. Oh, wait. There you have it, and then we have a breakup structure, a boss in 1 hour time frame, which is cool. It's following all the confirmations. We're glad it's working as we expected, right? So as I said to you before, once we spot this becomes a strong high. So not being likely, it's the one is the one which will be likely respected by the price. And strong high. And all right. And this is actually what happened, right? Would this question, guys? Would this? I mean, these highs here. Oh Jesus, this one here become our strong high. It has a boss, a liquidity, kind of a liquidity sweep. The answer is no, definitely no. This cannot be a strong high. Why? Because liquidity is accumulated here. Is not reaction in another block. It's not very evident the liquidity grab. So that's it. These are just breakage, which we just considered as normal. And as you can see here, in 1 hour time frame, we're still in a bearish impulse. Good, good. Right. All right. So now give me a sec, please, because I have to put the order I mentioned to you before. Right. So I'm just gonna put it here. hmm 4 pips. So the stop loss. Okay, give me a sec. I'm just putting the order. Right. So as you're watching here, I'm just putting a pending order on the in this pair, because the stop loss is that tight. That's why I put that small amount of of lots. Here is stop loss. All right, has been placed. Good. It has been placed. Hmm. Jeb is fine. We have liquidity prior the entry area, which is good. Right. Perfect. Sorry, guys. Now let's keep going with the continuation of 1 hour time frame, right? So here we will assume that all of this is liquidity because it's what it is. Accumulation of highs or lows in a specific part of the market will become liquidity. So plenty of people would consider this as pivot points, and that's why we don't consider them as a strong high. This is just liquidity, accumulated money. Okay, so far is what we are watching here. We will wait for the price to continue with its movement. Right, let's go to 50 minutes. So you see, 50 minutes has changed radically because now if we zoom up, we will consider this is a bullish impulse. And I think it is. So Let me analyze the previous range. So look at the next. I'm gonna show you a market shift in the market, right? Look, imagine that from this point upwards, the price doesn't exist, right? So most of us have, using the theory I have just explained it to you, would analyze the next. We would find our strong high, which will be this one. Liquidity sweep here is very evident. We have a very evident liquidity sweep right here. Boom. After the liquidity sweep, we have a break of structure of the lowest low, which is this one. What I'm doing here, boss, break of structure. Oh, not with that candle wick, but with the body of the candle. I mean this wick. Yep, like that. And this will become our strong high. Ah, jeez. Mm-hmm. This was a certain moment or a strong high, so the high that would be likely respected by the price, right? Strong high, boom. Now, what happened here was that the price, well, didn't do it, and actually it reacted here. But probably, I'm pretty sure the price is reacting in a 1 hour time frame order block, maybe. Look, is this in this part? Uh, so here, maybe here, we will find an order block. Yeah, look, 1 hour order block, this one. So that's the reason why everything has a why on the market. So this reaction on this order block causes the retracement in 15 minutes. This 15-minute retracement. So let's see it properly and clearly. So you will be able to understand why. Right. Look. So that's why we need to be very picky with the past. Let's say, look, now you can see this order block causes the actual reaction or retracement we're watching in the 15 minutes time frame, right? Still, is not strong enough in 1 hour time frame, but in 15 minutes it was enough. It was strong enough to break or strong high of 50 minutes. That's why when we get so biased by the lower time frame, we lose plenty of money because when this happened, we do not see clearly the market, right? Now look at the next. This becomes a boss break of structure, right? Boss. Right. Now in 15 minutes, the price is we need to find our strong low because now we're a bullish in 50 minutes time frame. And which is the time frame we're gonna keep analyzing honestly. Boom. Here we have it. And here we have the boss. So this is the strong low in 15 minutes. Oh Jesus, what did I do? Anyway, you find it, you understand it, right? So this is the strong low in 15 minutes. Question. So the question here is, where would the price go? Would it continue going downwards? So going down, or it will continue pushing up. So this is where we as traders can get a little bit messed up by all of the information we have in the market. And this is what I gonna let you understand the real intended direction. So look at the next 15 minutes. We're in a bullish impulse, right? In 1 hour time frame, we can see the next. We can see all this liquidity which is accumulated, right? 1 hour, not 50 minutes, 1 hour. All of this is money accumulated. All this trend line is money accumulated, right? So, and if we are in a bullish impulse in 15 minutes, I consider we can continue buying in 15 minutes. But remember that we are in a bearish impulse in 1 hour. So with that, it means that we need to wait for the price to get to some supply area in 1 hour time frame. And once we got that once we get once the price get to that supply area, all right, we can thinking on stop buying in 50 minutes, right? Here it is. All of these are supply areas. You need to watch the class of order blocks that I have in the channel. Please watch it, right? So this is a 1 hour order block. And remember, lower time frames respects higher time frames. So if the price hits one of our 15 minutes time frames, right? 1 hour time frames, we need to pay close attention to those reactions, right? Mhm. So this is what I'm actually seeing. We are in a bullish impulse in 15 minutes, right? We all know this. 15 minutes. We are in a bullish impulse, all of this. Great. Now, what will happen after this? After this 15 minutes impulse, I consider the price can continue. Enter here, pushing up, and here we will be able to find if the price continue pushing up or continues with the main trend line of all the time frame. 4 hours is bearish, 1 hour is bearish, 15 minutes is bullish. So that's why sometimes when you are executing orders, you feel the price or the market is against you. But no, it's because you're not actually understanding the real intended direction, right? Anyway, with that being said, guys, let's try to do the exercise of understanding the market, right? This what I'm saying is that because I know what will happen next. Of course not. I'm not anything close to a good market wizard or something like this. Of course no, I'm just a guy who uses technical analysis to interpret the price. So I am interpreting the price may go up. Some other would think the price will keep pushing up, and it's completely fine. I mean, I am fine with them, right? But I need to be honest and assume that if I'm mistaken, I just need to be able to go back and realize why. So this is the point to be mitigated. Now, when I would say the price would not continue pushing up, well, simply when the price gets to this order block, boom, breaks it. When the price breaks this 15 minutes impulse or range, the one that you're watching here, well, I will change my mind and then I continue selling. Why? Because we all know that the price may get to this 4 hour order block and ideally to the one that we got here. Look, the daily time frame order block. So look how much we have to continue going down. So that's why you don't need to get fixated with just one interpretation of the market, right? Let's move. Right, so look at the next. The price never gets to this order block, but it's actually reacting to this one here. So would it be enough to continue pushing up? I would say yes. But we need to see in lower time frames, like in 5 minutes, what is actually doing the price. Yeah, I think it will continue pushing up. So look, probably I'm pretty sure that in 5 minutes it has break the 5 minutes range. So no, no, not yet. Mm, yeah, I got you. What I'm doing here, I'm just analyzing the 5 minutes range. It entered here. This was a strong high. Then this strong high was broken by the body of the candle. And with this body of the candle, we can determine it will continue pushing up, even though it made a really huge retracement and took the liquidity of these lows, but it continued pushing up. So if the price breaks this high with a body of the candle, mm-hmm, mm-hmm, uh, didn't do it yet, didn't do it yet, didn't do it yet. Jesus, this is slow. Right, let's go to 50 minutes. So why do you think the price hasn't breaking this high? Actually, because it's accumulating people's money. So here is a lot of people putting selling orders. Sell, 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 sell. So maybe the price would react in one order block here, here, or even gets to this low, this order block, which is not be mitigated. Takes the liquidity and continue pushing up. Well, it didn't do that. Do you see? It reacted in this order block, 15 minutes order block. Great. So in today's exercise, we're not actually analyzing entry points. Now we're just analyzing the market direction. So let's see if the point to be mitigated actually is mitigated, which I think it would do it. People start selling. They think that we're in a selling in a bearish impulse. Okay, the price made a small retracement, probably entered to this order block. Let's see if actually respects this or not. No, it didn't respect it. It goes down, and now the price actually comes to this order block. Now let's see. We're still in a bullish impulse. Don't get biased by this movement. This is just this is just inner structure, which means not the real direction. The real direction comes from this here and here. So as I said to you, now we are here. We will wait for the price to break this high, this low, excuse me, or we continue pushing up. Remember at the very beginning of this example, I was expecting for the price to get to this order block, and now it has already get to it. Why you will say? Well, because during this movement that the price made here, it creates all this liquidity. All of this is liquidity. So multiple lows accumulated, multiple highs accumulated in lower time frame, 5 minutes, 1 minute, within 15 minutes range. So it entered. Okay, people still get biased by this impulse, so they start selling. And in a matter of minutes, even days, the price has take out all the people who were selling here. Boom, mitigated. That's fine. You see, that's why we cannot get that bias by the market. This was liquidity. We can say French. This is gonna go down, but it didn't. But it was because we didn't know the real market intention. Right now, look how interesting these things works. When the price gets to this order block or this one, people will see this just in this impulse. So they will start thinking, oh my gosh, now the price is going um, up, to the uptrend. It's pushing up. Now they start buying, and guess what? It gets to an order block. So this order block here, and now boom, we need to sell. But people will start buying because they see this impulse. I don't know. Maybe you have been in that place. I was in that place before, right? And it's fine. It's fine to understand all of this. Let's keep moving with the analysis. Once we have a break of structure and this point to be mitigated actually becomes a boss, so a break of structure with a body of the candle, we can happily find our new strong high in 15 minutes. sorry, strong low, excuse me, because we're in a bullish trend. So I'm trying to look in, and for doing that, I'm looking for the pattern I explained at the very beginning of this video, which is not here. Here is not. We do have the liquidity sweep, the breakup structure of the highest high here, but we don't have an actually reaction on an order book. Look, it's actually far from it. Oof, nah, I didn't like it. You see, it's not actually very clear. If the price has done this, for example, then we say good, good, right? But it's not. So no, nope, nope. All right. So this is the strong high, the strong low. Excuse me. 15 minutes strong low is this one. Accomplish everything. Reaction in an order block. Break of the highest high. Good. So we're gonna keep working with it. And now if we go to 1 hour time frame, we are bearish, but we need to update our direction map. Let's say, let's call this thing the direction map, and is that we are in a bearish and we're in a retracement. So it's a bull rate. Let's say it's a bullish retracement, a bull rate. That's how I call it. You may call it a normal retracement. I call it a bull rate. Simple. Bull rate. And I think in 4 hours it looks like the same. Mm, kinda. In both. Yes, it's making a bull rate as well. So we are in a bull rate as well. Bull rate, which is a bullish retracement. Right. Let's see. Let's see if the price actually gets to this high. Now it's making a retracement. Definitely, that's what the price would do after took the liquidity of all this high. It would go down and take the liquidity of the people who are selling. And now let's see if the price does it. Now it's actually entered probably to this order block. Hey, it didn't do it. All right, it did it. Let's see if it respects this, because if you see here is another or lower another order block. For those who already know what I'm doing, this is actually an entry point, which means a possible point in which the price will enter and have a reaction. So we can actually put an order here and expect some income from that. Hmm. Look, 9 pips, 9 pips. Hmm. 9 is fine. It's fine. Look, we will have here a 1 to 5. But here I will wait for a confirmation. This is not actually a really nice point, but I will wait for a confirmation in lower time frame. But I think, yeah, I don't know. I would need a confirmation. This is not a confirmation class, so that's why I'm not gonna look for it. Right? So the price did not respected it. Normal. Now we have a reaction. Good, nice reaction. You see, we're just practicing today with market direction, but you see, now we could spot a interesting under order. Now this high here will become our point to be mitigated, right? Guys, it's a little bit painful to wait, right? And imagine if we're waiting in just this backtesting session for fun. In the real market, is actually Actually very difficult to wait. Anyway, let's keep waiting. The price did not mitigate this point. So what do we say? Ah, no, yeah, I did it. Boom. Good. Just with the real market direction, we were able to spot a risk one to five order. Actually, 5 pips really well execute this order. Very really nice. It went really nice actually. Anyway, now what? This is the thing. What do you think people who do not have this direction intent map, which is this thing? I'm just calling this way. What do they believe after this breakage? Definitely, they would be bullish, right? In 50 minutes, they're bullish in 50 minutes, right? But we already know the price is likely starting a 1 hour retracement, right? It's going down because if you see here, all this continuation of lows had created a huge liquidity point, which means plenty of people are accumulating orders. And the price can simply continue going down and take them out because we are expecting for the price to get to this low. But we don't know. How do we confirm that the price will have the intention to going down? So let me erase our beautiful order. After we have this boss, we have to do the same exercise, which is marking the market direction, which is this now next. This is our strong high in 50 minutes. Liquidity grab, and now we have here the boss. I won't want to mark all of it. We already got the idea, I'm pretty sure. If not, guys, I kindly suggest you to watch the video again. So here it is, liquidity grab, 50 minutes time frame. If the price breaks this low with a bottom of the candle, I think we will be out. Oh no, excuse me. This will look. This is what we're gonna do. This is their strong high was here. Wait, here, right? All right. Now we have to update the price. The best suitable strong high will be this one here, because it was the one in which we have the entry of our order, right? And then we got a breakage of the structure. Now, this low also accomplishes or conditions liquidity sweep breakup structure. But if the price actually goes so fast down, oh jeez, it goes so fast down and do not provide us certain liquidity like this, for example, something like this, all right, that we can actually continue, follow, or take this as a possible point of interest. If this goes so fast, it will take it out, and this will become a strong high, right? Sorry, it will become a strong low. So that's why we need to see how the price behaves. And I'm actually marking here our entry point. So this is one. Actually, the price can also react on this order block. Let's see what happens. As I told you, it went so fast to this point, and I'm not sure if it is gonna respect it. Oh, it did respect it. Well, great for the market. Right, so it's going up. So now that after we got this very respectful market movement, which was something I was not expected, uh, well, now we can actually validate this as a strong low in 15 minutes, right? In my experience, most of these things are not respected. And if you realize this is a Monday or a Sunday. This was a Friday, so the price on these days, no, Friday is a normal day. Forget what I'm saying. Okay, let's wait. Let's wait for the price. Strong low. This is a point to be mitigated. Let's see if the price actually mitigates it and continue with the bullish in retracement in 1 hour time frame. All right, so for some of those who are looking for a possible entry area, here it is. So we have plenty of liquidity here prior to the entry point. We're gonna wait for the price to get there. All right, it didn't do it. It's normal, you know. So remember that I told you that there were many people biased by this huge impulse, something that you just forgot to explain. When the market hit this 1 hour order block, it went actually so fast down to take all the people who start buying, 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 buying. You know, no risk, no Lambo, no risk, no Lambo people. So those people were trapped in this movement. So they were buying very anxiously, and then boom, they were out. Nice. Let's now look for this order block. This bull red is getting super close to the strong high in 1 hour, right? Which is fine. Again, I mean, when I say it's fine, it's just because it's what it is, right? It's getting too close to this. Would the price respect it? Yes or no? We don't know. Probably yes. Gets here, continue going down. Still, there's liquidity here and here. So let's see actually what happened. It's interesting. I like to see this. Do you remember that I have a pending order? Would you like to see how it goes? Here it is. I put the order here, private liquidity, and the price has not actually opened it. Patience. Patience is the word and the key. So let's keep an update in this. This is a boss, breakup structure, 50 minutes, trade, and now let's watch here. Another block here. So this can be or new strong high, strong low, excuse me, in 50 minutes. This is just liquidity, didn't open this strong low. Why do I say this? Because the price actually here accomplishes the confirmation pattern, but I like to see more liquidity prior it. So let's see. Well, when I said liquidity prior this point was like what I explained to you before, and actually real great movement. But you see, it wasn't, just took the liquidity. So let's analyze it a little bit more. This is liquidity, probably can enter here, which it did here, it did here. Probably the price is making here or future strong high, future strong low, excuse me. All right, it went a little bit down. Ah, yeah, it went here. There you go. Boom. All right, this is much, much better now. Now this is strong low in 50 minutes. Mhm. Great. So again, expectations to get here. Mm, let's see if the price actually respects this low here. All right. So look, the price is actually getting to the highest, to the order block 1 hour time frame. Mm, Would the price respect our low? It didn't respect it at all, but it entered here. Sorry, I wasn't talking. I wasn't talking about the low. The low has been respected. I was just talking about the order block. The price re-enter, retest this area, and then it makes the breakup structure. Potentially, this can become, or this may become, or strong low. So we're about to see a very interesting market shift. If the price breaks this high, definitely. It didn't do it. It didn't do it. Look where the price goes down. Now, here's a question. Why the price got such at this reaction? Tell me, why the price had this immense reaction? Why do you think so? That's right. Many people were actually buying because we have been on a bullish impulse in 15 minutes time frame, plenty of time. So when it gets that evident and when the price reaches to this order blow mitigated in 1 hour, which is the extreme of the movement, we would expect something like this. This is what we would expect from an order block, a really nice order block. Now, is our strong low being diminished? Let's say probably yes. Just if we find a breakout of the structure or a breakout of this low with a bottom candle, but also because of the next. Can you see or can you spot all of this liquidity here? This from this low to this low. So there is a lot of liquidity, and that's what the price actually grabs. What I would say and I would think is that the price may react here on this order block, the extreme, the one has not been mitigated, and then it will continue with the bullish impulse. And if this breaks this previous strong low that we have here, well, I will actually change my mind, and I would say, okay, we're in a continuation of a trend. All right, it entered to the order block as I said to you before. Boom. Uh-huh. So still we are in a 15 minutes time frame bullish impulse. Why? The previous strong low that I put here and the one that was here was actually taken with a huge candle stick and candle body and candlestick, right? But more than that, it came to the previous range, which was this one, and enter on the unmitigated order block. And that's why it provides me that sensation that the price will continue pushing up. And also, if we go into 5 minutes time frame, and we can see when the in if in 5 minutes the range is broken with the body of the candle, it means that we will continue in a continuation of an impulse, right? Mm-hmm. Here it was, the 5 minutes impulse, getting to that point, had a reaction, normal. Look, probably we have a reaction here. All right, it didn't. We didn't have a reaction. So now this breakage, which is very interesting, has let us know that we are in a bearish impulse, right? We are in a bearish impulse. Let's update our price, okay? Of course, we won't be able to. The market is not all-time highs or all-time lows. No, it's just reaction after reaction. Simple as that, right? Supply zone, we will respect for this movement. With this breakage, we are fine, absolutely fine. Now we're gonna look for this. This is our now or strong high. And if you remember the previous 5 minutes of the first 5 minutes of this live session, I explained it to you uh, how the price would react after a breakage, and this is actually what the price has done: bullish impulse, breakage, period. Let's go to 1 hour time frame. This is what I told you. Remember, guys? Look, remember all the liquidity that was accumulated here? Liquidity, money to be trapped. And definitely, because we're in a bearish impulse, we will expect to this point to be mitigated. Great. Let's continue with the analysis. Right, since we are in a bearish impulse in 15 minutes, we will expect for the price to get to it was a or all right, let's see what happens. All right, we have our next breakage here. Boom, boss. And here we found the next the big range beginning pattern. They took the liquidity of the high and they make the boss. Now let's keep updating this low. Let's put it here. Let's keep updating. This could be a new beginning. What I'm actually doing here is I'm actually marking the order blocks, right? So the potential point of reactions, right? That we would wait for the price to get. Now it has got to this point. This is the point to be mitigated. Very close, very close. All right, it did mitigate it. So we could have put an order here. Boom. It continued. Right now, after we got the break of a structure with a body of the candle, we all know what we have to do. It is just update and update. Do you see how interesting this is? Understanding the real direction is actually that gives us certain confidence, right? Certain confidence. Because if you realize here, I was expecting for the price to continue pushing up, but definitely, I all this strong movement was backed up by an order block, which is this order block. So once I understood that the price broke this low with the bottom of the candle and this one, I said no, let's change our mind. And now, since we have changed our mind, we're actually good. We're fine because we're actually analyzing towards the real market intention, which is take the liquidity of all of these people who were selling and buying here. Now, something that I would wait, because this is something that sometimes happens, is that the price in this last order block, which I call the extreme of movement creator, most of the time we have here a very important retracement or yeah, retracement. And this is something I didn't do in our, let's say, direction map here. I didn't update this. Now in 15 minutes we are bearish. And now we're not more in a bullish retracement. We're not. We're in a bearish continuation pattern. Continuation. So let's keep moving. Let's keep analyzing, my friends. I'm gonna do this until the price gets to this order block, and then we'll be fine. We have been doing this live session for more than an hour, which is very good, very cool. I like to do this. I like to do this backtesting sessions with you. I learn a lot actually, so that's cool, very cool. Let's keep moving. It went down. It has gone down. Okay, and the price get to this. Now it's actually doing certain movement retracement, but let's see. Let's see. Would one of these highs become more strong high? I mean, these ones, this one, this one. No, they're not. Or this is too small. Hey, maybe, maybe this one. I don't like it. It's too small. It's not that clear. Hmm. Let's see if it actually. Well, I would take it, but at least this block here is a possible point of reaction or interest. Supply zone and supply zone. Let's see what happens. All right. Never gets to those, but it get to this one. Good, which is fine again. It entered here, and then it continued, and it mitigated this. If you have seen this before me, congratulations. You are already understanding the logic behind the trading, right? Perfect. And this will become more strong high. Now, is a dangerous strong high? Yes, it is. Why? You already know this. We have already lived this. When the price gets to this, order blocks mitigated, right? It means that the price would likely to have a very strong reaction towards the direction we're actually seeing. So let's try to see what happens. You see, it's having a really interesting reaction. Would it be strong enough? I'm not so sure. Well, it wasn't. It wasn't, and that's fine. You see, guys, right? I think we're gonna stop here. So in today's session, you have seen how we analyze completely a range from scratch, right? From scratch. You see that I just selected at random time in the market, and we actually could have even an order, and we could execute an order in the real time. Real time. This is backtesting, right? And we also understood, which is what I want you to know, how we could play with the time frames properly, and then after that analyze and see what is the real market direction. With the real market direction, of course, we got a little bit, we didn't get this clear at all because we were bullish, but we understood the reaction here, and then we went fast. We made a change of mind really fast, and we keep continue selling, which is the actually main idea of this. Definitely, when the price gets here, we will be able to spot interesting reaction areas towards the um towards what? Towards the bullish direction, right? Excellent, guys. You see? So I am pretty sure, and I don't know if it was that was you, but all of this, all of this that we have analyzed was a market retracement, 1 hour bearish impulse, retracement, continuation of the trend. This is what we, and in this minor, or how do you say, inner I forgot the concept. Wait, oh yeah, inner structure. All of this is just inner structure, right? Because it's in this range, right? So that's why we sometimes get so biased and we lost accounts because we don't know the real direction. And I hope with this video you have got this even clearer for your trading and further execution of your trades. This has been a pleasure to work with you, my friends. So for those people who want to watch this again, I will re-upload this in a shorter version, with all the explanations and all of this. So for you to take notes, practice, and actually try to get this information that I'm explaining to you. All right. So thank you so much for being today's session, and I'll see you the next. Okay. Watch some of the videos that I have in my YouTube channel that are there for you to help you understanding much better these concepts. And let me show you the next. All right, give me a second because I'm gonna show you next. If you didn't have the time, let me show you this. On my channel, on my YouTube channel, I have here, well, plenty of information about the market, right? So look. So here it is. For example, this is how I analyze the ranges. These last 3 or 2 videos are how I analyze and execute the orders, just as we have done it today. And if you want to go to the more explanation videos, the first ones, like the simple market structure, order blocks, liquidity, right, smart money transformations, all of these are like the basics that you need to understand to follow and continue executing the market properly, right? And the other concepts I have here are just like presentations in which I explain how the market works, a little bit of cycle trading particularly. And in the last ones, it's where I execute, or I actually show you how I use smart money concepts to understand the ranges in real time or the market direction. And definitely this will be one of those, okay, those videos. So here is all the information for you to keep working to understand better. Let's make more democratic the knowledge about trading. You don't need to pay thousands of pounds or dollars to get this information. It's all there in the internet. I'm one of those people who want to share that information. I do it actually in this moment because it helps me getting better. The more I explain to you, the better I get. And once I get good enough, I can be able to actually teach you 101 or as you want. Also, this is something I want you to look for, and it is that I have a small link here and I have an ebook, right? So in this ebook that I'm showing you here, you will find The strategy simplified, right? My strategy simplified. I explained the ranges, how it worked, the breakage, all this information, right? And in 5 different phases, which I think is simple to understand, simple that you need to understand as well in your practice. And this is how it works, okay? And if you want to know a little bit more about me, here is a little bit introduction, right? So, friends, with this information, I hope you being able and satisfied with information. So this is all, and I'll see you then in the next backtesting session, right? Bye bye, friends.